maybe a European doesn't articulate their ambition in the same way that an American might. It doesn't mean they don't have it.
That is Ophelia Brown. After a short stint at Goldman Sachs, Ophelia joined Index Ventures, where she spent a lot of time in the US working on early investments in Robinhood and Supercell. Later on, Ophelia built her own fund, Blossom Capital, and made herself a name with investments in unicorns such as Checkout, MoonPay, and Pigment.
The question is, do you want it more than anyone else to go and be their partner? Which means, are you going to work harder than anyone else to get in front of them? I don't take no for an answer. There is no length, that I won't go to, and I am a terrible loser. So that is just not an option.
So by the end of this episode, you will know how to build your own fund, how to raise $1 billion before you're 32, and most importantly, how to turn a philosophy degree into a successful investment career. That is the Venture Lab podcast, and I'm your host, Luis.
Ladies and gentlemen, by way of introduction.
Ophelia, what do I need to know about you to understand the person that you are? And when I'm asking this question, I'm specifically trying to understand your earliest context and your experiences that had an impact on who you are today.
Really diving in with the deep questions to begin with. First of all, thank you for having me on this podcast. I'm honored to be here. Diving back into my earliest experiences, to give a bit of context, I'm the youngest of three. We were all daughters to two parents. We lived in Cambridge, which was a town just north of London. And I look in some respects in terms of how similar we are in the way that we've grown up, and certainly in terms of professional careers and attitudes. And so looking back, I think certainly those earliest experiences were probably in the way that we were brought up, and attitudes to education and attitudes to work. My parents took education very, very seriously. Our primary school was actually, I want to say less than 50 meters opposite our home. So it was very easy to walk to school, but we were really within that, school environment regularly. And Cambridge was obviously a university town, but, definitely drilled into you to be top of your class, excelling in your grades, trying to live to your full potential. And that combined with the fact that you really earned your way through life, that you really kind of strove to be your best in work, both to kind of deliver your full potential, but also in order to kind of make your own. So I actually had my first job when I was, I think it was, I tried washing car window screens with a friend when I was 11. My mom was seriously unimpressed at that, but I got my first proper job when I was 14 in the summer. I went to work in the Gap. Really got to understand customer service and early client relations through that. And I went from that French connection and kind of kept in work. And so it was kind of those kind of strong beliefs, education and career, kind of really were impressed on us very early on. So I think that's some kind of the earliest formations in terms of kind of belief and attitude. And then what I really realized about myself, as I grew older and kind of developed a lot of passion and figured out what I wanted to do myself, was that I always had this kind of entrepreneurial bug. The first idea I had for a business was being a restaurant owning DJ. I was 13 or 14, and
That's very cool.
I thought that I would cook in the back and DJ front of house. Obviously, a terrible idea. And then I think that was the kind of the pattern through my life. It's that I always had terrible ideas. I went from that to wanting to put, after a visit to China when I was in my 20s, I thought that I would sell Chinese train tickets online, only realizing that obviously a foreigner was never going to be able to build that business. And when I was at business school, I had an idea for a peer-to-peer car sharing startup that also wasn't quite fully fledged. And it was realizing that I never quite had the ideas, which was turned me to VC in the end.
Yeah. If we go back again, how did your How did your parents actually instill this drive and ambition in you?
I I think it was the way in which we were probably measured, as in there was very much a belief that we were given the best education, everything was available to us, and we had to make the most of it. And when it came to university, that only the best universities would be acceptable, and only ever being the best was acceptable in our household. So I think it was just a very, very kind of tough and like, I mean, grateful for it looking back, but that was kind of the attitudes with which we were brought up. I remember when I came out of university, I had two offers to go into investment banking, and I mean, this was probably some of the best advice I was given at the time, but I had an offer from Lehman Brothers and Goldman Sachs. I mean, little did I know at that time what Lehman's fate was, and I'd really enjoyed the kind of the culture of Lehman and the people that I'd met. But obviously there was like the prestige of Goldman, and I remember my dad saying to me, you only go and work for the best. You're only going to go and be the best. And that kind of like sums it up in some way. So yeah.
And yeah, it's interesting that you put it forth because I wanted to ask this question. Like you studied history and philosophy, and I think like one could say that there's not a direct link necessarily to investing. So what do you think? What advantages does your background in humanities bring you in venture capital?
So I think that's one of the beauties of the British education system, that you can really wait to learn business. What I think that was very powerful about learning classics, which was philosophy and language and history, is it was a real training of the mind. And I certainly fell in love with the philosophy. I mean, logic. I had this great professor, and it just taught me how to argue. Really, my husband always, he's Estonian, and he always says, Brits especially, we just love to debate. And especially in my family, we could probably argue anything which way. And so negotiation tactics definitely came from some of those courses. And then philosophy, I was just very interested in and curious about, consciousness and the mind, and subjectivity and objectivity. And I think that really just encapsulated how curious I am, and how I'm kind of trying to always challenge what is acceptable, or what is considered the status quo, or what people just hold to be true. And very much I was taught, how to challenge all of those assumptions and presumptions and thinking. And I think that's very much what you do in venture as well, and what entrepreneurs do on a daily basis is like, why does it have to be like this? Why couldn't it actually be like Y instead of X?
And I have to ask this question, Ophelia, how do you get from studying philosophy to working at Goldman?
It was very clear in my mind that I wanted to go and get a business education after getting a humanities education. So I knew I wanted to go to business school. And in my mind, there were two paths to get there. I mean, again, this is very typical of the British education system at the time. But if you went to talk to the career counselor at Oxford, you were told, three or four degrees. You could do finance or consulting, or you could, sorry, three or four careers. You could do finance, consulting, law, or medicine, basically were the ones that they would talk to you about. And I thought, well, if I do consulting, I can go to business school, but then I'd have to go return afterwards and pay my fees back. Or I could go to banking and hope to earn enough that I could pay my own way through business school. That plan almost worked, but then I joined Goldman in 2008, which was definitely the worst time to join an investment bank. So the boom years of 2006, 2000, early 2007, I'd missed. And hilariously, I'll never forget this. Lots of people went into banking because obviously like the pay was just so good, and like there were the known bonuses when it came to the end of the year. And my boss at the time, when it came to bonus time, got £1,000, and he was like, just go and have a nice dinner. It's like, this wasn't quite what I was expecting, but sure, it works for me. I mean, it's 2008. I'm just very lucky to have a job at this point.
Yeah, yeah, I was surprised as well that were giving bonuses in 2008. And then your first experience in venture was at Index, right? And While you were there, you spent a lot of time in the US as well with early investments in Robinhood, for instance. And I'm curious, what did the time in the US teach you? Like, what were the main differences that you encountered to Europe, or also specifically the UK?
So many things. I think I like to say that my venture training came from the US, just everything in terms of how investors think about taking risk, how they think big, how they are there to help entrepreneurs build a technology company, really be true partners in every sense of the world, trust them, underwrite them, give them the capital, then empower them. And through Robinhood and other investments, I mean, truly got to understand how world-class product and engineering teams are built and how people can dramatically think to change or transform industries and how long that journey is. Vlad and Beju's journey didn't start in 2013 when we did the seed investment. It
Yeah,
started much longer before when they were at Stanford together. But also having that bar of what a great entrepreneur looks like, that was the bar with which I met entrepreneurs in Europe, and that was extremely helpful. So one of the first investments that I worked on at Index was our investment to Supercell. I'm meeting Ilka when they were printing $1 million a day with their two gaming apps, and it was 90 people in this beautiful office in Helsinki, which is like the snow was up to your knees outside, and like ironically, their office was the old Nokia office. And we went in, and the first time that I met him, and they had these cells of people working, and one of the PMs had just moved from Brazil to come and work there because she was like so passionate about what they were building, and Ilka and that meeting, I mean, that just is imprinted in my brain. And I remember Ilka showing a map on the wall that was a map of the world, and every time there was someone playing a game, like the light would flash in the country that they were in. And it's like someone in like the middle of, the Atlantic flashing away. And so from, meeting Ilka and other extremely successful entrepreneurs in Europe, like Tarved or Christo building Wise, it was just so helpful to have the bar of like, okay, this is what great looks like in SF. These are what
yeah.
brilliant entrepreneurs do, the very best. But actually, the caliber of talent is also on the rise in Europe. Like these people also exist in Europe, and they also have the potential to build really big businesses. And that's what I'm forever grateful for, is to have the opportunity to experience both ecosystems.
Yeah. And you mentioned that the role of the investor was quite different in the US from Europe back then, that they were much more like supportive and much more part of the whole entrepreneurial process. How do you see like how do you see it today in Europe? Do you think something changed, or is it still the case?
I think we've definitely evolved a lot as an ecosystem in terms of, I mean, you can see it from the basics of kind of what is a normal term sheet. And investment today looks a lot more like what you experience, or the terms that you could get in the Valley. And I think that's also compounded by the fact there are a lot more US firms investing over here, and the entrepreneur has just got smarter about what market norm is. I still think, especially in a worse market, so post 21, you're starting to see kind of structure again from growth funds protecting their downside risk. I think that's more prevalent in Europe. Like the focus on the downside protection is definitely more prevalent in Europe. Like the focus on control is more prevalent. And that, those things are a result of not being comfortable with the risk that you're taking.
We'll get back to this topic, but I wanted to ask you that when you left Local Globe, it's a very well respected fund, and you started Blossom. Like, how old were you back then?
31.
Yeah,
Yeah.
because
Oh, it was just before my 31st birthday. So I
oh,
was
really?
30.
Yeah. No, because
Yeah.
I'm asking this question because it's a very bold move. So I was wondering, why did you leave the safe environment of a renowned fund to start your own? Because also one thing you said in an interview is that everyone thought at the time that you'd called you crazy.
I mean, that was certainly true. I think it comes back to that entrepreneurial instinct just being so natural. It's part of my character. I think when I was at Local Globe, having left Index and we were doing seed investing in Europe, I really got to understand what the opportunity was for a Series A investor in Europe. You know, you had the duopoly of Excel and Index in terms of just phenomenal funds that had repeated returns vintage after vintage, and they had been here for 20 years. But still, most entrepreneurs wanted to raise from the West Coast and have the Sequoia benchmark, etc. brand name, but those firms just weren't focused on doing early stage Series A in Europe, and I felt like there was a gap in the market. And the more that I thought about it and the more that I saw the opportunity, I was just compelled to do it myself. And there were some pivotal events that happened before kind of I decided to take the plunge. I remember Kieran at Blue Yard. I had a breakfast meeting with him in Munich, I want to say in early 2016, just after he'd raised Blue Yard. And I was in awe of him that he'd just gone and raised a new fund. I mean, it basically didn't happen in Europe. I think there was Simon and Toby, who are now a Mosaic, and I wasn't so close to their story, but I had heard of what they were doing. And then there was Local Globe and there was Blue Yard. And that and being at Index and constantly listening to Neil Reimer's story of how he got started with the firm and what he had achieved there, they were just, and I think this is true of how entrepreneurship accelerates in any ecosystem, is if you have more examples of someone did it, then you're more inclined to take that risk yourself. I think about that a lot in terms of we think of the hundreds of unicorns now that have been built out of Europe. And the more that founders are leaving universities or their well-paid tech jobs and they see that someone took a risk and then they built Revolut or Klarna, you're compelled to try the same. And I think that was very much for me too. I kind of saw other people were doing and it was possible. And my husband actually had also just gone and raised a fund. And I was like, wow, fundraising looks really painful. Why don't I
Let's do it.
try that?
Yeah.
And yeah, I had to go for it. And fortunately, I was so naive about fundraising. Once I was in it, I just couldn't look back.
Yeah. And when you started Blossom, you had a very clear profile. So it was only Series A, and then 5 investments a year, and always as lead. And I think mostly also aiming for 20% ownership, right? Like why? Like why those criteria?
So it started with the premise that Europe was obviously a growing ecosystem. There was opportunity here, but it certainly wasn't the size of the valley. I mean, we weren't going to claim that, dozens of unicorns or bigger were going to be built a year in Europe. So it was like, okay, Europe is a finite ecosystem. It's going to grow like 5% a year in terms of opportunity. But really what matters is finding those very special companies that are going to be global leaders and really change the world. And we just want to be the best partners we can be to those founders and to hopefully own as much of those businesses as possible. So we came to the view that we thought that the right number, both in terms of what the total addressable number of Series A's were, what percentage of those we thought were going to be the outliers, and what percentage of those that we would find and win. And it felt like 5 was the right number. Also thinking about what is the service that we can deliver to them. Like it was very much in the model that we wanted to spend as much time with these founders as possible and kind of earn our right as their partner and investor. And so it couldn't be more than 5. So each fund in the end has ended up being 14, 15 companies. So really concentrated versus your traditional venture fund, which is 30, 40 companies. And yeah, ownership is important to us to make sure that every company in the fund matters.
If you have such a selected amount of investments that you make, is the due diligence process, does it look differently than if you have like, let's say, spread 40 bets for each fund?
We spend a significant amount of time with a small number of companies each year. We're not looking for volume. We're not trying to see every single deal in the market. And we are just looking to win what we love. And so the diligence process for entrepreneurs, one tends to be pretty quick in terms of if you come with a prepared mind, you know exactly what you want to drill into. and what you want to get answers to. It very much prioritizes the relationship with the entrepreneur. So we always say, we don't want to spend time kind of going through the numbers with you in person. Like, we don't want to come with an exhaustive list of questions. Like, let's focus on building the relationship and figuring out how we can help you and whether we're the right partner and we can be a good partner to you. We can do all the desktop stuff our side, but we promise to not take up too much of your time, be a valuable partner, even in the diligence process, and kind of prove to you that we can be a good partner long term.
So sounds amazing. From 2018 to 2022, you raised, I think, nearly $1 billion. Yeah, it seems like you know a thing or two about fundraising. So I wanted to ask if anyone who's listening is currently raising a fund, what would you say is the most important thing that no one really tells you about and that you can't find online?
Or would you only limit me to one thing?
Okay, you can name two.
I think, especially when it comes to LPs and they have such a long-term horizon in the way that they think, they're not thinking in 1 year, 2 year, they're thinking in decades in terms of their portfolio, and very much want to prioritize the relationship, very much will just take their time. Like, it's hard to push a timeline on them when they have a wealth of opportunities in front of them, especially when you're an emerging manager. Like, how do you get them to focus on you? And so being creative and kind of assertive with your timeline that ultimately needs to work, but also recognizing that you have to work with them to make it happen. I think that's one thing that's very important. And the second is the number of touch points. I mentioned my husband raised a fund, but his advice to me was, it was 8 meetings per LP to convert them. And I managed to do 5 meetings per LP to convert them. But the first meeting, they don't take you seriously. They're like, you probably won't come back. The second meeting, they're probably actually trying to understand what you do. The third meeting, you've got to prove that you've done some of the stuff that you said you would do. And then fourth meeting, when they finally ask you for like an LPA, which is when you know that they're finally taking you seriously. So I made the mistake of thinking that everyone asking for the data room definitely meant they were going to commit. I remember we brought on an advisor at the time, a lovely woman called Tatiana Chapova. She came from an LP, and I was, I think, 2 months into the process, and we had a breakfast in London. And I was like, I've got 75 million committed, like all in the data room, like all done. This is like going to be such an easy show. Like 2 months later, all the LPs that had asked for the data room had passed, and like no interest. It was the complete opposite of, VC kind of, we only take the data room if we're actually interested in doing some work. But the key marker for me was like when the LP asked for the LPA, that's when they were serious.
5 to 8 meetings sounds insane to me before committing. And you're very well known for winning competitive deals. How do you do this? Like, where's this coming from?
I believe it's wanting it more than anyone else. And I think there's a lot of truth to that, to deal making. The companies and founders that are out there, right? They're all building their businesses. The question is, do you want it more than anyone else to go and be their partner? Which means, are you going to work harder than anyone else to get in front of them? And then are you going to work harder than anyone else to be there, to win them and convince them that you're going to be the best partner to them? And I think that's always been true to my personality. It's like, I don't take no for an answer. There is no length, that I won't go to. And I am a terrible loser. So that is just not an option. But I think, it's really being passionate about what we do and believing in our model and wanting to work and partner with the very best and prove that we can be good partners to them.
So kind of like, besides your track record, let's say, like what arguments do you bring forth that resonate most with founders?
I think that's changed over time. Certainly in Fund 1, it was much more, we're just going to work harder than anyone else. Like, we had some track record, but compared to the multi-stage firms, and always, when we got into competitive situations, it was, do I take the brand name and the multi-stage firm who's going to put me on the map, or do I take an emerging manager who's just committed to me, who I mean something to their fund, and they're just going to work harder for me? And that was always the debate that we found ourselves in, and we just won on the latter, that we would just work harder. We had networks that were comparable to the multi-stage firms. Like, we worked very hard to keep our network both in Europe and the US, which is super important. But ultimately, we were going to show up and we were going to be there regularly, and they knew that they were getting myself and Imran, the partners of Blossom, and we were committed to that. And I think all of our actions in the process left them no doubt. So that was kind of the beginning stages. And then as we evolved to Fund 2 and Fund 3, and we started to build Blossom's track record, and not only the track record in terms of the success that we had seen for these companies past our partnership at Series A, but also, the references from the founders firsthand of, this is the experience, this is what it's like to work with Blossom. And you could hear from Owen at Times, which, recently reached $1 billion status this year, or Eleanor for Pigment, which is, another French unicorn that we were partnered at Series A, or Guillaume at Checkout, last valued at 40 billion, and one of the world's largest fintech businesses. Like, they will all happily pick up the phone to talk about their experience at Blossom. And that's what I'm so appreciative of now. When we're in a competitive situation, I only need to text Eleanor or Guillaume and say, can you please just pick up the phone to talk to this founder, to tell them what it's like. And, they've never let me down.
Yeah. Well, that's amazing. I actually experienced myself that they're very supportive, because I spoke to a few people that you work with for a while. And one thing they said was, I mean, besides that you're a very serious runner, they also mentioned that you that you put your network to work better than any other investor. And how do you do this? Like, what do they mean by that?
I think I've always loved making connections, and I've always understood kind of, either paying it forward or giving someone something of value. And so the ability to connect people and like bring people together, I find that powerful. It's the power of relationships. VC is a relationship business. I despise this virtual interaction. I prioritize very much spending time with people in person, and I am energized by those conversations. And so if I can bring someone to know someone and it's going to result in something great, that energizes me for sure. I remember when I was an associate at Index, I used to, and this was novel at the time in European ecosystem back in like 2014, 2015. It's certainly not novel anymore, but we would have these like founder dinners at my house. And it was, 8 to 12 people, and it was mainly founders or a couple of investors. And certainly there were stories of, I met that person and then they invested in me like 2 years later, or I met that person and we started a company together. And it's just like, it's so cool to create those connections.
Yeah. Yeah, it's a topic I'm personally very interested in. So when you need a favor from a person that is not in your network, but there's someone who is in your network that knows this person, how do you go about it?
I did 2 ways. I think if there's a easy, warm connection and someone can make an introduction for me, happy to ask them. And if it's not so warm, I'm very happy to go direct. And I remember certain memes about the ability of VCs congratulating themselves for their ability to write an email, and I think there's some truth to that.
Yeah.
That that you have to use the power of language and words to convince someone. But a friend also gave me some good advice some years ago, was like, you can't just ask for the intros all the time. You can't be that person just being like, can you intro me to X? Can you intro me to X? You also have to give something back. And I'm very conscious on that. Like, if I take up someone's time, how do I repay them?
Yeah, because I'm always wondering if the first step is trying to understand what the other person is looking for, and then just like first probably providing value to them so that they are maybe more open or inclined to also reciprocate that.
I mean, certainly with founders, when we reach out cold, we spend a lot of time in terms of, okay, what stage are they building at? What are the problems that they're thinking about, that where we could be relevant, or what's in their hiring page? Like, who are they looking to hire? Do we know anyone in our network we can send in without even having spoken to the founder, to show that you understand that you're asking something of them and you want to bring something of value immediately.
Yeah, exactly. And then when the deal is done, so when you backed a founder, what is your way to provide as much value as possible to them?
So we created this model of how we wanted to support founders from the very beginning. And the view was that, at Series A, when things are moving so fast and so dynamically, and you're starting to invest more capital, inevitably, some things are going to go really, really right, and some things are going to break and go wrong. And it's how quickly you can identify what's broken and fix it and course correct, that it doesn't become symptomatic and it doesn't cause any more issue than it should. And so we really wanted to prioritize the frequency of interaction with the founder. So we committed to being with them in person at least once a month. And to, we have regular dialogue all in between on WhatsApp, etc. But those sessions are never reporting sessions. So we don't want to come out and just be presented slides about kind of how everyone can present slides with KPIs that going up to the right. That's not going to help anyone. But to have an agreement in terms of what are the KPIs that we're actually looking at, and we can monitor those async. We don't need to have a meeting to discuss that. But when we're together in person, let's talk about the strategic topics that are actually going to make or break the business in the next 12, 18 months. So most of those topics end up being around growth, hiring, kind of internationalization, kind of new strategy or product, etc. But I'd say growth and hiring are the two main areas that we spend most of our time with founders.
And one of your colleagues that I spoke with said that when you're spending time with founders, you're always pushing them to be their best selves. I think, that's a very great skill. But how do you do this?
I think it's challenging them or helping them to see what might be possible. Like, have you thought about this? Or why couldn't that be possible? Or if you did this, would it unlock that? So try and think I think the beauty of being an investor is you're never in the day-to-day of the operations. And sometimes when you're heads down in the weeds, you don't have the ability to look up and think, okay, actually that is possible. And I think that's the opportunity for investors to be that sounding board or that kind of thinker with them.
To have the kind of macro perspective to be able to accelerate then their trajectory, right?
Exactly.
Yeah. I would also love to talk with you a bit about the European startup ecosystem. We briefly touched upon it already because I also know that it's a topic you have been vocal about before, and it's also something I dedicate the podcast towards. And as you mentioned, you have spent quite some time in the Valley. And how do you think because you mentioned before risk tolerance, but also how does the culture differ between the US and Europe, particularly in terms of talent and founder mindset?
In terms of founder mindset, I think it's pretty equitable. Obviously, there are countries in Europe where, if you're building in the US, you can definitely just think about local market for most industries, right? For at least the first 5 years. And there are a lot of countries in Europe where you can't think about local market. But I would say that was probably more of relevance of 5, 10 years ago. Anyone building a B2B business today and wants to build the best product is already thinking about how I sign those best customers in the US. And especially with AI, all of those customers are out on the West Coast. I think that when it comes to product engineering design talent in Europe, and it's the same in the US in early stage, people stay with their networks. That I would often say that, the first 10, 15 hires, if you really can do that all through network. And obviously, the strength of Stanford and engineering, et cetera, it's very possible to do that quite quickly. What you end up seeing in Europe is that those networks tend to be quite local. So if you're building in Paris, for example, you'll hire people that you either went to school, to university with, or someone that you worked with at a startup, and those are how those clusters are built. I think product and engineering tends to be much more loyal in Europe, partly because maybe you don't have the wealth of opportunity of how you can go and trade your equity like you can in the US. But certainly, I think that the longevity of engineers' career in SF is with one company is much shorter than it is in Europe. Just people just stay around longer. And I think that's why a lot of European founders choose to keep product and engineering in home, because they have the network, they build great culture here, and then they put GTM in the US. I think it's pretty challenging for a European founder to go and hire out cold in SF with no network. Like, not to say you can't do it, it's just more challenging.
Yeah. Many people in Europe are saying that European founders need to level up their ambition to be able to compete with US companies. But you have a different take on that. I read that you said what it actually needs are investors that could match the risk tolerance of US investors. So I'm wondering, who's the problem in the European ecosystem? Is it the investors or the founders?
So I certainly think the ecosystem has evolved a lot since I originally made that claim. And what I don't like about these arguments is it talks of averages, like you can't group all European investors and you can't group all European founders. And clearly, Europe has very ambitious talent that are capable of building, transformational, world-leading global category leaders. Sometimes what I think people don't appreciate is that maybe a European doesn't articulate their ambition in the same way that an American might. It doesn't mean they don't have it. And I think that's one of the powerful things about being an investor on the ground and having grown up here and really understanding the cultural nuances in every country is that you might hear ambition in just a different way. And I think it's incredibly important to have it, and certainly something that we look for in entrepreneurs that we back. But it might just sound different to the US.
Yeah, I can imagine there's a different way of self-perception and communication, I would say. And
Yes.
in general, like I think the venture landscape is changing. Like we're seeing, for instance, like many large funds that are turning into RIAs, and also AI native companies are growing at a much faster pace than what we've seen before, which I think poses the question, like if investors still want to sacrifice liquidity. So I'm wondering, what do you think are the factors at play kind of force this change, and how do you see the venture industry evolving?
I think the model is very much evolving because obviously it's been around for such a long time now that you have such vastly different players. You have at the early stage, you have everything from the micro VC fund, the solo GP, the angel turn GP, and then you have the much more established funds like the multi-stage firms where having different strategies, moving more into PE in some ways, like looking for a different returns profile. And that's great because I think there was a post on LinkedIn the other day, product market fit of investors and founders. Like founders are going to choose what kind of fund that they want to work with based on their needs. And so I think having healthy competition and the ability for founders to select is a great thing.
What do you think about the time frame of the returns? Like, will LPs or other investors still be interested to sacrifice their liquidity over 10 years when there's like those kind of like super fast scaling companies?
I mean, even if the AI companies super fast scaling today, that we don't necessarily know when the exit is going to be for them. I think a lot more entrepreneurs are in favor of staying private for longer. It's certainly something that has changed over the last decade. I think we're at the lowest point for IPOs. But I believe, whether there becomes structural change or friction in the system, that also creates opportunity. Is going public going to be the way that liquidity is accessed? Or is there going to be something else? What it looks like 10 years from now, I don't know that just going public with the only way that institutions get liquidity.
What is the one thing that used to be very important for investors, but which will not play a very big role in the future?
Oh, that's a great question. I mean, I think we've seen this over time, but and this is quite European answer for sure, is the importance of the CV has certainly started going out the window. I mean, it's better if you dropped out of university than you went to university. Uh, and kind of your credentials, I think, matter far, far less because obviously your ability to build product and kind of demonstrate what you're capable of today is far more important.
And how will you as Blossom adapt to that? I mean, also like on a larger scale, like what are your next steps? And also probably most importantly, like what are you most excited about?
I mean, in terms of what we're excited about, we're living through one of the biggest changes in terms of technology at the moment, going from pure SaaS software to AI native and agentic AI, and what this means for how companies are going to buy software and how, what role agents are going to play, how we're going to build, and, how far are we from the single person unicorn, and what is the need for an investor in a single unicorn world. I think that's one of the amazing things about venture is, I mean, I can finally say that I now feel somewhat old in the industry, in that I've almost been doing this 15 years, and I've definitely been doing it most of my career. And I feel like I could have just started yesterday, as in, and this kind of, I guess, does full circle to our discussion here is, constantly challenge what you know. Just because you knew something to be true 5 years ago or 10 years ago does not mean it's true in today's world. And I think AI is certainly causing a lot of investors to question kind of, is what I knew applicable here? And will I make the mistake of thinking I knew what was true? And that keeps you incredibly humble, I think. It means the learning curve never stops. And I think the internal dialogue is insanely busy right now.
Yeah. I think that's a great way to end the conversation. We also have a closing tradition on this podcast, which is called the open letter. And you can address a one sentence letter to a specific person, or a group of people. So, for instance, your younger self, or to future entrepreneurs, or to your competitors, for instance. Who would it be, and what would you say?
I would send it to all potential founders who
Yeah.
are thinking about building. And I would say, take the plunge, make the jump, and believe in yourself.
Thank you so much, Ophelia. If I was thinking, if I had to name one thing that really stood out to me, I think it's your independent way of thinking, and especially also the high conviction actions that follow from it. And you mentioned it in our conversation. I think it's very rare, and I really admire it. So yeah, thank you so much for this conversation.
Thank you. I really enjoyed it.